Hi, I'm Gary Venner, CEO of IFA Acquisitions, and in today's video, we're unpacking something every business owner needs to understand before they sell: business asset disposal relief and how changes in 2026 could affect how much tax you pay when you sell your IFA firm. So business asset disposal relief is a UK tax designed to reduce the amount of capital gains tax, CGT, that you pay when you dispose of qualifying business assets or shares, usually when you sell your IFA business. It's valuable because instead of paying the full CGT rate, which for higher rate taxpayers can be up to 24%, BADR lets you pay a lower rate on qualifying gains. Now that means a significant increase in cash you actually keep after a sale. Well, until April 2025, BADR was taxed at 10%. This was a very attractive rate, but as part of recent tax changes, that rate rose to 14% from April 2025 and will go up again to 18% from the 6th of April 2026. What this means is that if your sale completes on or after the 6th of April 2026, the CGT on qualifying gains is likely going to be higher than it would right now. Strategically timing a transaction while the lower rate still applies could save you a significant amount of tax. The £1 million lifetime limit. Another very important point is that BADR has a £1 million lifetime limit per individual on qualifying gains. Now that's cumulative over your life. So if your total qualifying gain exceeds £1 million, any amount above that cap gets taxed at the standard CGT rate, which could be as high as 24% for higher rate taxpayers. So even if you qualify for BADR, only the first £1 million of gains benefit from the relief. Anything above that is taxed normally. Also, if you've fully used up the relief on selling a previous business, then once it's used, you can't apply the relief to future business sales. BADR doesn't apply to all asset sales. Here's a common mistake we see. BADR only applies to individuals selling qualifying business assets or shares. It doesn't automatically apply just because a company sells assets. Selling your client bank as a sole trader or partnership or limited liability partnership does qualify as business assets. If your limited company sells its own assets directly, like property, equipment, or client lists, that sale doesn't qualify for BADR. Instead, the company itself recognizes a gain and pays corporation tax on that gain. It's only when the individual owner realizes a capital gain, usually through selling their shares or disposing of the business assets personally, that BADR may apply. Who qualifies for BADR? Well, to qualify for BADR, you must be disposing of a qualifying business or shares in a trading company you hold personally. You need to have owned the business or shares for at least 2 years before disposal. And if it's a limited company, you typically must personally hold at least 5% of the ordinary shares and voting rights and have been an employee or director. So why this matters to IFA firms in 2026? If you're fortunate to have planned the selling of your IFA business and have successfully gone through due diligence, agreed the sale and purchase agreement, and have obtained FCA approval to the sale and complete by 5th of April 2026, you will benefit from the 14% BADR relief. However, if you're thinking about exit planning in the next 1 to 3 years and completion will be after the 6th of April 2026, BADR should still be part of your strategy conversation. By acting now while the relief is still lower than CGT, you could materially reduce your tax bill. BADR can make a huge difference to the money you take home after selling your business. But it's complex, and the rules around timing, asset type, and eligibility are critical. A good exit strategy considers not just when you sell, but how your transaction is structured. So if you're considering selling, whether this year or in the next few, start planning now. Business asset disposal relief, formerly entrepreneurs relief, has already dropped from 10 million to 1 million pounds, and the relief rate rose from 10% to 14% and rising to 18% in 2026. There's constant speculation about further cuts, abolition, or CGT rates increasing, potentially even aligning CGT with income tax rates. So if higher CGT or reduced BADR would materially impact what you walk away with from selling your IFA business, an earlier sale could protect far more of your proceeds. So thanks for watching. If this helped you, hit the like button, subscribe for more expert insights, and drop a comment below if you have any questions. See you next time.